So what do you make of the price action, Joe? The S&P is holding these record highs. It's off 0.1%. The NASDAQ, it's off 0.6, also at a record high. It's been strong, and it's been rotating in terms of the group leadership. What does that tell you?
Well, it's kind of like Forrest Gump's box of chocolate. You never know what you're going to go get inside from day to day. Clearly, dispersion is emanating through the equities market. When I look at the collective sectors, the only thing that I want to overweight is the diversification of owning all the sectors. Since the middle of May, we've really been in a sideways pattern, and I think it's the better outcome of two potential outcomes, Sarah, and that was the 50, 100, and 200-day moving average. They were very far away from the S&P price. The furthest distance that had been in about 10 years, the 200-day was 14.5% below the 200-day. So either the S&P price is going to fall to meet those moving averages. We don't want that. We didn't get that. What we got was sideways price action that's allowing the moving averages to move up to more reasonable levels. 50-day sits 1.5 below the S&P price, and you've got the 200-day at about 10.5% below the S&P price. So we're in a sideways pattern until we understand from corporate earnings how real the inflationary pressures are.
Let's talk commodities. Bye-bye Bitcoin, because long commodities is now the most crowded trade, according to a new Bank of America fund manager survey. CNBC.com's Pippa Stevens with the details. Pippa.
Hey, Sarah. Well, commodities overtaking Bitcoin in popularity, definitely not something you hear every day. And in fact, it's the first time in the survey's history that commodities has been voted the most crowded trade. Bitcoin moved down to the second spot, followed by tech stocks. Now, some of the enthusiasm for commodities is fading a little bit here recently, most notably with lumber. But oil continues to be a winner, trading at its highest level in more than 2.5 years. And energy stocks are rising on the back of that. Exxon, an outperformer today, gaining more than 3% after Bank of America reiterated its buy rating on the stock, saying it expects the company to hike its dividend by the end of the year. The firm sees shares jumping 40% to $90. Wilf and Sarah, back to you.
Multi-year high there for Exxon. Pippa Stevens. Pippa, thank you. Joe, commodity trade getting a little too crowded?
In certain areas it is, and in those areas where you've seen the excessive speculation, in particular, you're seeing fiscal policy from the Chinese policymakers that's kind of pulling back liquidity. So ag pricing, copper pulling back. On the lumber side, yes, we've experienced a retreat from the parabolic move in April of May, where lumber went from 1,000 above 1,700. It's right around a little below 1,000 now. But Sarah, that is still well above the 5-year average at 480 and the 10-year average at 339. So, yes, you're seeing a little bit of a correction there, but there is still a structurally sound bull market as it relates to oil pricing. Understand that disincentivizing production is the way that you move society away from traditional hydrocarbons. And if we're going to be electrifying vehicles and power generation, you're going to need the raw material of copper. That's how you transmit it. That's how you store it. So copper and oil, absolutely, they are at the beginning stages of a long, enduring bull trend.
What about gold and silver, Joe?
I think both gold and silver have lost some of the demand appetite to cryptocurrencies, Wilf, whether it's Bitcoin or Ethereum. Clearly, gold and silver has been in that retreat, and you did not see the actual physical demand for gold because of some of the deterioration in terms of COVID, in particular in India and in parts of Asia that you traditionally would. So you lost some of that fundamental demand. I'm not necessarily sure if it provides for investors the real store of value that they thought it once previously did.
Shepard Smith here. Thanks for watching CNBC on YouTube.